Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me is my co-host, Managing Director of International Content, Emily Parker. Lawrence Lewitton is off. Good morning, Emily.
Good morning, Christine.
Good morning. It's a girls' session today. All right, let's take a look at Bitcoin. The Coindesk Bitcoin price XBX index is currently trading at $43,147. Bitcoin is stabilizing. It's down about 50 basis points, but not plunging as we saw the other day along with traditional markets. And the Coindesk Ether price ETX index right now is at 30.31. ETH is bouncing back up about for 0.5%. And the new DFX Coindesk DeFi index right now is taking a bit of a hit, trading at $545, down about 66 basis points. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So when we look at this, Emily, I mean, we were remarking, just speaking earlier, that it kind of has a correlation with the traditional markets. We see in the U.S. stocks, at least, a bit of a bounce. Futures are up about 0.5%, 1%.
Yeah, so, with the evergreen disclaimer that we never really know what moves Bitcoin prices, but it does seem that, Bitcoin's fall was somewhat linked to the larger fall in the stock market that many are attributing to concerns over Chinese property developer Evergrande. So this just raises a lot of questions about Bitcoin as a unique asset, because we've seen over time that sometimes it correlates a lot more with traditional markets than some crypto enthusiasts would like to believe. So I'd be very interested to hear what our guests think about that.
All right, let's check in with our crypto markets guest.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the crypto markets is Messari CEO Ryan Selkis. Welcome to the show, Ryan. So taking a look at Bitcoin, we saw a huge fall the other day. Now it seems to be stabilizing. Futures are up in traditional U.S. equities. What's your interpretation, analysis of what's happening?
Well, I do agree that some of the fears are more macro-based, and crypto broadly is still a very risk-on asset and will be for the foreseeable future. It's volatile. It's something that has seen quite a bit of speculation over the course of the last 18 months. We're deep into a bull market right now. I don't think we're at the end of that bull market, hopefully, but the key, I think, internationally, not just for the stock markets, but also for the crypto markets, is whether the situation in China is contained or whether it truly could spark some contagion. And that's above my pay grade. But right now, I can tell you it hasn't really fazed the folks that are here live with us at Mainnet.
Ryan, you mentioned China, and I assume you're talking about Evergrande, right? Not China's crypto crackdown.
Right.
So that seems to me like when we talk about contagion, that's generally talked about in terms of the stock market, right? And how that's been sort of, the fear that's where contagion would hit. So why would that affect the crypto market necessarily? Because, as we were discussing earlier, what is this correlation here between, something that's happening in China that may or may not be affecting, the stock market, and why would that spread to crypto markets necessarily?
Well, I mean, in the U.S., the property bubble and boom and bust in 2008 was largely the result of a property bubble as well. And that had trickle knock-on effects into the stock market because there was so much global exposure to subprime mortgages. So everything is connected at the end of the day. And whenever you just have an asset manager or a company that is at the scale as Evergrande, it could cause some second-order effects that are unknown, and I think that fear is trickling through the broader markets right now. Crypto is not completely divorced from the reality of the rest of the macro markets today.
Yeah, and that's what I was just sort of going to ask you. I mean, do you think in some ways this undercuts a little bit this myth of crypto as being a little bit unique and independent from the more traditional markets?
Well, I don't think in any short period of time you can draw a conclusion whether or not Bitcoin and crypto assets are a good hedge. If you look over any longer period of time, medium term, long term, crypto is an asset class, and Bitcoin in particular individually is an uncorrelated asset that's performed exceptionally well. So I think long term, you're looking at a hedge or a portfolio diversifier, but in a liquidity crunch and a flight to safety, where there's a lot of fear in the market, you're going to see everything correlate to one, essentially. And that's what we've seen last year in March during the COVID, beginning of the COVID crisis, when the markets really woke up to the threat and we saw the first lockdowns. I think you've seen that kind of periodically over the course of the last several years, whenever there's been a major sell-off, either due to fears that the Fed might be tapering asset purchases, COVID, any significantly bad news, and I put Evergrande in this camp, correlations tend to go to one, and unfortunately that's in the wrong direction this week. But the much bigger question is, how large is this crisis going to be? And again, will there be second order effects, and will this go far beyond Evergrande, or will it be contained?
Ryan, I see that you are on Mainnet. I had the pleasure of attending the conference yesterday. It's happening Monday, Tuesday, and Wednesday of this week at the Marriott Marquis in New York. It's been a great conference, having a lot of great conversations. There is, as I've been having these conversations with folks in the crypto industry, one topic that continues to come up is regulation in the crypto industry, especially in the United States. A lot of people have been talking about the SEC going after folks for lending products, yield products. We see that with Coinbase having to deal with that, and now they've decided not to launch their lending product. With stable coins, there's a potential investigation into whether or not they impact the financial stability of the broader financial markets. I wonder, is that spooking the markets?
Honestly, it's tough to tell on a day-to-day basis where these swings come from. With the entire market selling off yesterday, it's hard to draw a conclusion that this looming regulatory threat or more aggressive language from the SEC is what caused the spook yesterday. I think that's more or less been priced in over the course of the last couple of months following the infrastructure bill and its passage through the Senate. So I think that's more of a long-term, medium-term trend that the market is keeping a close eye on. I don't think that has anything to do with this week's sell-off per se. But I will say it is thematically one of the things that everybody is talking about. How can we get better clarity from the regulators in the U.S. and how can we actually get clarity that doesn't start and end with threats and then enforcement actions? Because ultimately what we want to be able to do is preserve what is the highest growth sector of American tech right now, and a $2 trillion asset class that's been bootstrapped from nothing in just about a decade. So I think the folks that are here on site are not speculators and day traders. They tend to be some of the folks that are building in the trenches, whether they're early stage investors, whether they're developers, other entrepreneurs and infrastructure companies. And it's 2,000 of the top folks in the world that are really trying to advance crypto and believe in crypto for the long term and want to see it succeed and fit within a smart regulatory framework. What's missing today is the smart regulatory framework. So I think that's what we're going to have to be very assertive about as an industry, and I've certainly been outspoken about that. But I think we'll make slow and steady progress on the tech side. Hopefully that translates into some results with some of the policymakers in DC, in Europe, and everywhere globally.
Ryan, what do you think? I know this is a complicated question, but what would you consider a smart way to regulate DeFi? Because probably some regulation is coming, right? But what do you think would be an appropriate way to go about it?
Well, I think clarity on tax reporting requirements would be a good start. I think regulating the centralized exchanges who are already regulated, right? And making sure that they have clear guidance on what tax reporting they should be doing on behalf of their customers. Embracing something like a safe harbor that Commissioner Peirce at the SEC has proposed and is very thoughtful about. It replicates much of what you'd expect from a public company filing in the US, but acknowledging the unique properties of some of these assets. So those are just kind of three areas of low-hanging fruit that I think would go a long way. And the reality is the regulatory state in the US has a hammer and everything in crypto looks like a nail right now, where I think they could ultimately be much more effective is if they were able to take their foot off the gas a little bit and recognize that any centralized entity that can be regulated, that is already subject to certain regulations, would be a good starting point for this discussion. But not to throw the baby out with the bathwater and come out like the current chair, Gary Gensler, has done and say that almost all of these projects are securities, because it's just a non-starter. It's going to push innovation or offshore and overseas, and ultimately it's really going to constrict the economic growth of the U.S. if that becomes the law of the land.
Mm-hmm. Ryan, just one final question. At the conference yesterday, there was a bit of news that someone actually from the SEC came to subpoena someone. And I know you may be uncomfortable with this question, but I have to ask, so the way you answer it, please, as a journalist, I have to ask it, but you can answer the way you want. But from your tweet, we saw that if you're wondering, this is from your tweet, if you're wondering when I actually decided to run for Senate, it was when these people came to my event, didn't buy a ticket, and served one of the speakers a subpoena. Enough talk, more war on our out-of-control regulatory state. I think your tweet speaks for itself, but do we know who it was who was served a subpoena? Can you confirm or deny? We're hearing word that it was Do Kwon, co-founder of Luna.
I can't confirm that. I'm not sure who it is. And frankly, because we don't know who it was, we're not actually sure that we can confirm that story altogether. But there were enough whispers about it that I did want to address it publicly. And really kind of turn this into a moment to catalyze folks in the industry to wake up to the fact that this is not acceptable behavior from elected representatives and regulators that ultimately work for those elected representatives to indiscriminately crack down on an entire industry, blow off invitations to attend the leading U.S. industry conference this year within this space, and ultimately make a good faith effort to engage and try to educate themselves on what's actually going on. So I think, the tweet does speak for itself, and I know it's gotten a good bit of pickup, and the tone is aggressive or assertive, but it, I think, underpins the sentiment that most in the industry feel right now, even if they don't say it out loud.
Ryan, are you seriously going to run for Senate?
No comment.
Okay.
Ryan, a real pleasure talking to you. And just hearing your response, it reminds me of Brian Armstrong's tweet that he was really frustrated when trying to speak with regulators and not getting much of a response. So appreciate you coming on and sharing your insights. Right, that was Ryan Selkis, CEO of Messari. All right, coming up, we'll talk more with one of our Mainnet guest conference speakers, Gavin Wood, co-founder of Ethereum, as well as creator of Kusama and Polkadot.
Coindesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. Coindesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
Coindesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
Coindesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, September 21st, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, debt woes at China's second largest property developer, Evergrande, have seen its share price plunge, and those concerns are rattling the wider market, including crypto. We're going to dive into those liquidity issues and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, crypto markets were down across the board Tuesday morning Asia time, with only stable coins holding steady. Forecast News' Lachlan Keller has the lowdown on what Evergrande's looming threat of collapse actually means for investors.
Evergrande shares began falling in August after regulators warned the developer over the risks defaulting on its $305 billion worth of debt could pose to the market stability. And with fears of contagion hitting all global economies, investors are taking risk off the table across all asset classes. One expert told Forecast News that the extent and scope of people invested is the biggest issue, with the impact set to hit national and local suppliers, trust funds, and investors. And while the notice it sent to banks saying interest payments expected on Monday wouldn't be made spooked markets, Thursday could prove key.
The bigger one is whether it makes the bond payments on Thursday when all the markets are open. And by not making the payments, that doesn't actually necessarily trigger a default. The default would come 30 days later because you have that grace period. But it could well be, but by not making that payment, it triggers other covenants in other loans. So people have, it's just the uncertainty and the complexity.
Sullivan says investors and suppliers are unlikely to be swayed by offers of real estate, and Beijing is reluctant to get hands-on involved, preferring to see a market solution. Whatever happens, he says the fact that crypto investments are easy to liquidate could prove an advantage. For Forecast News, I'm Lachlan Keller.
Meanwhile, Bitcoin miners could also be set for a hit. China's clampdown on mining saw the mining difficulty plunge earlier this year. But with the total hash rate continuing to recover, we're also starting to see ongoing increases in mining difficulty. Forecast News' Timmy Shen has all the details.
According to data from BTC.com recorded Tuesday morning Asia time, the Bitcoin mining difficulty level is expected to increase 3% in the latest adjustment. China's clampdown resulted in 4 consecutive declines beginning in May, but this latest adjustment follows 4 consecutive increases. Mining difficulty is calculated every 2016 blocks, or approximately every 2 weeks, and the increases we're seeing could be down to the recovering hash rate. Data from blockchain.com shows the total Bitcoin hash rate plunged from an all-time high of 180.67 million terahashes per second in May to 84.79 million on July 3rd. But it's been on an upward trend since. Monday saw that reading at 139.54 terahashes per second. For Forecast News, I'm Timmy Shan.
And finally, happy Mid-Autumn Festival to you. One of the most celebrated holidays is being marked across East Asia, with some celebrations taking a very modern twist. Fancy stepping into the metaverse to celebrate with an NFT mooncake, or showing your love of crypto by biting into Bitcoin? Forecast News' Michelle Lim reports from Hong Kong on some of the most innovative ways to enjoy the holiday.
No Mid-Autumn Festival is complete without a gathering of family and friends. But with the ongoing pandemic and reunion plans for some in the physical world scattered, the virtual metaverse has emerged as a way for people to connect. Decentraland China has designed a Mid-Autumn Festival-themed space for the community to gather in the metaverse. And its limited edition mooncake NFTs prepared for visitors to its zone have all been snapped up.
大家其实在一个虚拟的世界里边，跟全球不同的人一起在交流，在一起传递一种快乐。
And for those who prefer mooncakes, they can actually taste. Wesley Wan, the founder of vegetarian food retailer Eska, has been offering crypto-embossed versions in a Hong Kong mall. Hong Kong's love of crypto has proven strong. Wan says demand has far exceeded his expectations. For Forecast News, I'm Michelle Lim in Hong Kong.
Mooncakes in the metaverse. What will they think of next? Well, you can be sure we're going to tell you all about it here at Forecast News. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
All right, let's have a live look at Bitcoin. The Coindesk Bitcoin price XBX index currently trading at 43,000 and change, down about 1.6% over the past 24 hours. The Coindesk Ether price ETX index right now just about $3,000. ETH is up about 34 basis points over the past 24 hours. And finally, the new DFX Coindesk's DeFi index is trading at 542. DeFi is down about 1.3%. All right, the crypto industry is uniting once again in New York for Messari's Mainnet conference, as we mentioned earlier. Regulation is weighing heavily on people's minds, especially amid concern that someone was served a document at the conference. Investor Slava Rubin tweeting, "LOL, I just witnessed a guy get served by the SEC at the top of the escalator at Mainnet 2021, right before going on stage for his panel." And earlier I had a chance to speak to Gavin Wood, creator of Polkadot and Kusama, and co-founder of Ethereum, at the Mainnet conference. We spoke about regulation, Web 3.0, as well as more. Have a listen.
There's a lot of ways of explaining Polkadot, and I'm still spending a lot of time trying to figure out the right way of explaining it to each listener. But one phrase that has come up recently is the League of Parachains, which I think is not a terrible way of phrasing it. If we start thinking of blockchains and blockchain economies, cryptocurrencies as sort of proto-states, Polkadot is like a union of states, right? And it gives its infrastructure that allows states to interoperate with each other. And in particular, it gives states the security that they need to actually exist in this wild world. In the same way that, Texas and California both exist as nation states, very different in their sort of state culture, very different laws, very different tax laws, all the rest of it. But they both have their security protected by the United States of America. And we might call, the United Parachains of Polkadot.
That's interesting because a lot of protocols have their very unique and defined communities. Bitcoin, very libertarian, carnivore, Ethereum, very hippie, unicorns, cats, and vegan. And they're very patriotic, shall we say, to their coins. And so do you hope to break through that, or at least allow bridges between the two, that concept?
Yeah, I think...
How do you break down walls, I guess?
I would hope that, I think small walls are needed in order to protect cultures. These walls can be useful, but they mustn't result in the whole working against itself. That's very important. And I feel that, one of the first things I said about Polkadot was it's like, the biggest bet against maximalism. And that's this kind of crypto nationalism, this maxi sentiment is problematic in my view, because it doesn't place the good of the whole first, it doesn't place the good of the movement first. And so with Polkadot, Polkadot is partly about building bridges out. So building bridges to other networks. We already have bridges for like Bitcoin and Ethereum, but the goal of Polkadot is really to continue in that road, but also bridges inward, right? It's about building bridges between its constituent projects.
And what I hear you describing to me sounds like your vision for Web3, and maybe you could perhaps explain that out for us, walk us through that. Because if I were to explain to someone what the internet could provide to someone 20 years ago, one day you don't need a map, you're going to be able to go on your phone. And it would have sounded crazy back then. But so explain to me right now, 10, 20 years from now, what will the world look like with Web3?
It's a hard question because there are many factors at play, not just the technology that we're building. But broadly speaking, if I'm allowed to hope for a world, then it would be one where we have much more sovereignty over our interactions with each other and over our decisions. In my mind, the internet has facilitated a lot of institutions to consolidate their power and become ever more centralized. Now, some of these are new institutions like Twitter and Facebook and all the rest of it, but banks as well, governments as well. There are many things that some governments do that I think are not necessarily in the interests of the individual, but they are able to do this. Technology has been the enabling factor in them doing this. For example, we saw Snowden's revelations back in 2013 showed the extent of the surveillance state that was up until that point only suspected at best and in general unknown. And I think there needs to be a pushback on the side of the technology so that we don't end up in the situation where there are a very small number of people that basically have all of the power in the world, because that is a massive risk of failure, of systemic failure, when you put so much power into the hands of a single individual that could reasonably make a mistake, do something wrong, go mad, act out because they've got the mentality of a toddler, then this is a problem. This is a problem not just for them, not just for the people around them, but for the entire world.
I mean, the promise of the internet was the decentralization of information. Now, publications didn't have the authority to publish. We could self-publish. Now we're saying the same things with Web3, with blockchain technology, but is there a possibility, a concern that in the future that with the open access to finance that it could actually turn, that could become more centralized, and we could have a situation where the freedom of finance that was promised turns into a much more controlled financial system?
I have no doubt that there will be elements pushing themselves as decentralized solutions that will ultimately end up in this role as a very centralized, exclusivist, largely arbitrary institution. But my faith in the underlying technology and its ability to deliver trust-free, trustless products and services that allow us to regain that personal sovereignty that we have really lost in the internet age is unwavering. And at least my mission is really to push through and deliver that technology.
Talking about the technology, what are the lessons you learned from coding Ethereum that you brought to you in Polkadot?
Team is super important, and making the right choices early on with who you bring on, and the culture can make a huge difference to the long-term viability of the team, of the project.
We're also looking at Cosmos. Do you regard Cosmos as a competitor or complementary to Polkadot?
A little of both. Primarily complementary, because what Cosmos attempts to deliver is essentially a bridging technology. It says that blockchains have their own consensus, they have their own security, they have their own validators, they have their own capital that is securing these validators. And really it's just trying to provide a technological bridge so that each of these completely capital independent chains can sort of talk to each other. Now this is problematic. You can't really have a communications gateway between, certainly not a high security, high value communications gateway, if you have separate security mechanisms. It would be like two independent states trying to make a coherent militaristic long-term partnership without having coherent economies and coherent taxation. You can't really have coherent communication and coherent interoperability without coherent security. Now, of course, it's possible. You can kind of lesser forms of it are possible, I should say. It's possible to muddle along and kind of hope for the best and say, well, we'll sort of have a much higher amount of time that we let pass before we accept that this event that we think has happened and should have a consequence on this other chain. But basically, it's really quite it's insecure at a fundamental level, and that reduces the application set, the use cases that can be done within a system like Cosmos. And there's if you want to compare and contrast Polkadot with its sort of general security umbrella, so the fact that all of the individual shards, all the parachains, operate under the same security guarantees, is much more similar, technologically speaking, in terms of the guarantees given to application developers to the Ethereum 2 system, which is a truly kind of decentralized sharded blockchain, than the Cosmos system, which is really just a set of independent blockchains of differing levels of security, having a sort of a way of communicating with each other if they happen to trust that the other one's security is good enough for them.
Yeah. Commenting on the regulatory environment right now, the United States is investigating, exploring, especially SEC Chair Gary Gensler, decentralized finance. They're investigating Uniswap. They're also going after yield products. I wonder what you anticipate happening in the future for DeFi as regulators get a handle of what this space is all about?
What will happen with DeFi is, in my opinion, what will happen with everything else. You must be either truly decentralized, or you will be required to be licensed to do KYC, AML, and generally smothered with regulations. And I think I'm already on record, but if I'm not, then let this be it, of saying that I think this is, broadly speaking, as long as the regulations protect technologists, I think this is, broadly speaking, a good thing, because it will require projects to actually decentralize. And actual decentralization is the only way how these projects can survive in the long term, because they will otherwise fall prey to all sorts of weaknesses of centralization. And if it takes some regulations to kick these projects to become decentralized, or admit that they are actually centralized and get licenses, fine. That in my mind is a good watershed moment, and it's good to split these projects apart from the ones that have the tech to decentralize and have the ethos to decentralize, from the ones that really just want to offer regulated products, but without having to go through the rigmarole of regulation.
All right, regulation is certainly a theme. That was Gavin Wood, creator of Polkadot and Kusama, as well as the co-founder of Ethereum. Coming up, a new play-to-earn game on Ethereum alternative Solana, and checking in with Coindesk Gold Policy and Regulation Managing Editor Nick Day.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Blockchain-based metaverse gaming platform Star Atlas closing $2 million in a public token sale, adding to the $41 million in sales it has already raised from NFTs. These NFTs and native Atlas and Polus tokens will be issued in Star Atlas's play-to-earn gaming platform. And joining us now to discuss is Michael Wagner, CEO of Star Atlas. Hello there, Michael. So a lot is going on in Star Atlas, your gaming platform. Break down this world for us, for the user who goes onto the Star Atlas platform. What is these NFTs? How does it interact with tokens and such?
Sure. Well, good morning from the West Coast. Was not able to make it out to Mainnet, but great to be here on the show. And Star Atlas is a virtual gaming metaverse that's centered around space exploration, territory control, and political domination. Those are the strictly gaming components. We are also focused in the long term on a metaverse experience, which will, I think, in many ways disrupt the way people interact socially, human experience, economics in general, as well as politics and governance. But we are building on Solana, and we're integrating various features of DeFi, like Project Serum, to further enable our players to earn a greater income off of time spent within the gaming metaverse itself.
Michael, can you break that down for us a little bit more specifically? When you say you're going to sort of like change politics, and like what does that actually mean?
Well, so that's obviously a very bold statement. What I'm referring to is that through the development of this digital world that will run essentially in parallel to our physical world, we're trying to reintroduce many of the same experiences and opportunities that are present for people globally, with the difference being that in the digital world, we're able to eliminate geographic borders as a friction point for things like employment. And so we've actually seen this with play-to-earn gaming in Axie Infinity, where an entire economy in the Philippines was able to be supported effectively through the Axie gaming model. We think that that is going to be a major demographic for our player base, as well as major opportunity for people in developing nations around the world to be able to seek gainful employment, whether it's through the ownership of these NFTs or simply being employed by people within the metaverse itself in this digital world.
Michael, you mentioned Axie Infinity on Ethereum. I also have heard about Aurora on Solana, similarities and differences. Perhaps you can discuss?
You know, I'm unfortunately not as well appraised on the, I guess, competitive products out there right now in the play to earn space. We've been very much heads down in the trenches developing ourselves. It's been quite a busy year for us. We just launched at the beginning of the year in January. We rolled out an NFT marketplace product in April that we developed for the launch of a campaign that we called Rebirth, Genesis of a Metaverse. And this was a digital art collectible campaign. And then more recently, to your point, we executed on our token generation event on an updated game economics and tokenomics white paper, as well as rolling out our galactic asset offering. So unfortunately, my head's been a bit in the sand. So not following along with too much that's going on externally. But I can tell you one of the things that really separates us or differentiates us is the simple fact that we're building out to a higher quality standard, so AAA quality gaming standard, which translates into cinematic quality, hyper realistic graphics for our players.
Mm-hmm. I also saw that you had an initial exchange offering on FTX, which sounds very similar to an initial coin offering, an ICO. Is this a security?
We certainly don't think of them as securities. These are utility-driven assets that are intended to be used within the Star Atlas metaverse itself. I mean, further to that point, we have generated, as you discussed early in the intro, we've generated approximately $50 million in revenue through NFT sales over the course of this year. And this is within our first 8.5 months of operations. So in no way was the issuance of Atlas or Polis intended to fundraise for us. It was the initial distribution of tokens for players that are intending to use those within the Star Atlas metaverse itself. So Atlas being a medium of exchange, transactional currency, Polis being more directed towards governance and long-term development decision-making surrounding the metaverse itself.
Michael, can you tell us a little bit about your users? Where are they based? Is there any kind of interesting geographic distribution? Are they young, older, male, female? Just I'm curious about like who's actually using this.
Well, once again, it is still pretty early in development. We don't have a final product rolled out right at the moment. We have a mini game experience that we are introducing in the next couple of weeks. This would be the first playable experience by our user base, but we do obviously track traffic, and to my point about developing nations being kind of a favorable demographic, we're seeing a lot of adoption, a lot of use, or at least hits to the site from Brazil, also from Southeast Asia, from South Africa, perhaps surprisingly enough, as well as in India. So what we have to reconcile
when is the full
internally.
launch, Michael?
The full launch is many, many years, I would say. This is intended to be a progressive project that rolls out in phases. So we build out 2 concurrent products, the first of which is this mini game in-browser experience. At some point, we will develop a complementary mobile application that makes it more broadly accessible. But at the same time, we're developing out in this Unreal Engine game engine technology. This is the fully immersive 3D world. And that component, while we intend to roll modules out as early as the end of this year, it's likely to take us 3, 5, 7 years to complete.
All right, Michael, appreciate you coming on. Looks like an amazing game. Very good luck to you and your progress forward. That was Star Atlas CEO Michael Wagner. All right, time to check in with Coindesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of Coindesk, the State of Crypto newsletter. Hello there, Nick. What are you watching?
Good morning. It's I think the big thing we're looking for is whether or not the House actually does come to an agreement to vote on the infrastructure bill next week as they originally planned. And I think to some degree we're also watching to see if the government shuts down, if the U.S. government shuts down in the next couple days, as funding runs out and the debt limit hits. But we do see that congressional Democrats are trying to avoid this and introduce a continuing resolution. So, everything's up in the air right now, but I'd say those are the big highlights.
Nick, just to reiterate, it seems like all of the controversial language, the language that the crypto industry was so up in arms about, is still in the infrastructure bill. And given the situation we have now, it doesn't look that likely to change, right? Is that a fair statement?
Yeah, I'd say that's correct. There were several pushes to get an amendment in. There were different competing amendments that were offered, but currently, and as of right now, does not look like any amendments will be accepted before the bill goes into before the bill is voted on, and should go into effect.
All right, Nick. Thanks for the update. Continue to monitor it and appreciate your updates. That was Coindesk Managing Editor Nick Day, who is also the editor of Coindesk, the State of Crypto newsletter. All right, that's it for First Mover. Thank you, Emily Parker. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching Coindesk TV.